I'm Marilou Lou, co-CEO of Crossvault Capital Management. Welcome to Crossvault Conversations. Here today visiting with Ed Cross, the CEO of Cross & Company, a San Antonio-based full-service commercial brokerage firm. Extensive expertise in office, industrial brokerage, dispositions and acquisitions, plus development and investment services. In part one of our visit today, we're going to look at Ed's macroeconomic view of what's going on in commercial real estate. I'll start out. Sheila Baird, the chairman of the FDIC, stated in October testimony that they thought that commercial real estate loans, the problem loans, were going to be a real problem for the regional banking industry. What's your current take on the health of commercial real estate here in San Antonio, Texas, versus what you're hearing from your peers in the rest of the country?
Very thankful to be in San Antonio, very thankful to be in Texas. We are surviving this storm quite well, in large part because we haven't had the job losses and we're continuing to have actual people move to San Antonio and net job gains in some industries. I am worried about the debt markets in particular. I'm worried about the two things. One would be what's called the CMBS market, which was loans that were taken to Wall Street and cut up into pieces and sold. Those loans were, the majority of those loans were made at the peak of the commercial real estate market at what have proved to be very high values and very high percentages of loan to value. And it's likely that when those loans come to roll over, the value won't be there and that either the loan will default or the borrower will have to bring more equity to the table to pay the loan down. The other risk that we're quite worried about is interest rate risk. The federal government has been borrowing a great deal of money, and at some point their cost of funds is going to have to go up. What I call our rocket fuel, which is the 10-year Treasury, which is the basis for our borrowing as a spread to the 10-year Treasury, is at historic lows. It's at about 3.4% right now, which means we're borrowing anywhere from 5.5% to 6.5%. If interest rates, if the 10-year Treasury was to go up dramatically, say to 6 or 7%, borrowing rates would go up, cap rates would go up. It would be kind of a domino impact on our business. Now the good news is there is money available. Local banks are financing on a selected basis developers that they have relationships with, or they're rolling over loans and maintaining liquidity. What's interesting is the insurance companies have come back in the market and are now loaning money again on a permanent basis on
because I understood that had dried up for a while when they were dealing with their problems.
And it had, and what has happened is long-term corporate bonds have dropped into the 3 to 5% range, and a life insurance company, which has been our primary permanent lender, looks at loaning money to a real estate developer at 6 or 6.5% with an amortization where he's getting some of his principal back. And that's a competitive loan for him versus the bond market. Yeah. So to our pleasant surprise, over the last 3 to 5 months, the phone has started ringing again. The mortgage bankers are calling and saying, Life Company XYZ will loan on an existing project at what we can consider to be a favorable rate.
So are they cherry picking the very best projects with stable, good cash flows? Is that?
Yes.
So it's very competitive in that sense?
Not only the very best projects, but a low leverage. And so I'm actually old school. I like lower leverage because it's safer, but the typical loans now are 55 to 65% leverage, as opposed to where we were 2 years ago, which was 75 to 85% leverage. And so, as you know, leverage magnifies your wins and it magnifies your losses. And what everybody has discovered is let's lower the leverage a little bit.
Let's dial it back a little
Exactly.
bit. Well, we're seeing that across all the industries
Right.
we're looking at, not just real estate. That was good. If you look at our next post, you'll be able to see part 2 of our conversation with Ed Cross, where we discuss urban redevelopment in San Antonio.